We had a quick chat beforehand trying to make sense of the title, and we didn't fully agree. So the title of our session is If You Build It, They Will Come, Future-Proofing UK FinTech. So I thought maybe the easiest way to start with is if you do a short intro about who you are in your business, and then you talk a little bit for literally like 20 seconds about the one thing that's top of your mind right now in terms of what is important to you in your business, what is your focus? And maybe we should start with you, Dan.
Sure. I'm Daniel Bass. I'm the CTO and co-founder of Zeti, which is a green fintech focused on transport finance. My main bugbear is that fintechs don't think that sustainability is their problem, and they should. They're in the best position to track savings in carbon and NOx towards a better future, and they control the purse strings in terms of financing those green assets to accelerate the transition.
Thank you. Jonathan?
Hello, everyone. My name is Jonathan Annis. I work for a company called FintechOS. We're an enablement platform for banks and lenders to loan their money. From what we see in the market, and I guess my biggest bugbear is sort of the lack of personalization in some of the decisions that are made that creates cohorts of underserved populations, whether it be in consumer or commercial banking, and how that stems from a misuse of data. Everyone focuses on the front end, frictionless journeys, and attracting new customers easily, cheaply, and all the rest of it. But where you have an existing customer base, how do you serve those using the data that you already have on them more effectively for personalized decisions?
Lovely, thank you. Liv?
Hi, I'm Livia Benisty. I work for Banking Circle. I'm Chief Business Officer there. And we're a payments infrastructure bank, so fully licensed bank offering cross-border payments to many different participants within the financial services industry. I think when we were prepping on what's your biggest bugbear in the industry, I probably should have had, maybe my marketing team won't like that I'm not actually going to relay it to the specific issues that we deal with, but my biggest bugbear in the industry more generally is the funding model and the incentives that it creates in terms of behavior and the product set. So I think where funding goes to is a topic that everyone knows about. That definitely needs to be addressed. But we're also, in my mind, if I push the boundary a little bit, we are developing essentially better UIs for a market that is already pretty well served, and will make money and scale into either to tier ones or just to a larger market. What is interesting and innovative about FinTech when it started was trying to kind of change that a little bit and really shift the market, and we're not doing that for the underserved, we're not doing that for the smaller markets, the funding model doesn't allow for it. It also leads to pretty bad behavior. There's a reason in the US you can't really form a bank if you're owned by a private equity firm, and it's because it's super short term. You want to get in and get out, and I don't think that's what we have the potential to solve.
Thank you, Liv. And Alia?
Hi, everyone. I'm Alia Mahmud. I'm a Global Regulatory Affairs Practice Lead at ComplyAdvantage. Now, I'm not sure if you guys have heard of ComplyAdvantage, but we play a very pivotal role in keeping the financial markets and systems safe and secure by providing financial institutions and regulated industries with data insights related to their customers to make sure that they can identify and detect financial crimes. So I'm sure you can all guess what my biggest bugbear is when it comes to fintechs, and it's the way they're becoming victims and being exploited by criminals with the rising, just increased rates of financial crime and fraud that we're seeing over the past couple of years. The National Crime Agency estimated that last year alone, financial crimes and money laundering cost the UK economy £100 billion. And there's a reason why the UK government has made fraud a national security threat. If we want fintechs to scale, if we want them to expand, and if we want the UK to be the center of innovation and technology, more needs to be done to stop this.
How does this sound to all of you? It's interesting because we've got on the one side, fintechs don't care enough for sustainability. We've got regulatory aspects and risk and fraud. We've got the industry sits on a lot of data, but it's not being used the right way. And then there's a biased funding system that doesn't necessarily allow for new things to emerge, and it actually forces people to perpetuate the same thing. They sound very different on the surface, but in reality, a lot of it goes down to data. and a lot of it is about understanding the data and how you're using data, and that's my take on this, and I'm throwing this as a bit of a curveball because we didn't really discuss this. But I thought it was really interesting to see that a lot of the conversations we're having today ultimately can be seen through one particular lens and focus on that. If this is also about what do we need to do for us to be able to continue building and not being exposed to wars, economic crises, pandemics, and the likes, what is it within that that we think we can actually leverage in our respective businesses, either through collaboration or just building something distinct and unique that allows us actually to navigate through these periods? So anybody wants to volunteer an answer? Otherwise, I'll point somebody.
Yeah, I'm happy to kind of kick off with that unless there was... No, we're good. I think that there's an infrastructure issue, that there's definitely the data and the insights that you can glean from that. And we need to get a lot better at that, both internally within our companies to exploit opportunities, but also in the industry. I think there are infrastructure issues. So if you're talking about kind of build it and they will come, I think back to when M-Pesa first started, and I was working on the side of that project, working for the settlement bank at the time, trying to get it through our regulator. M-Pesa launched really successfully in Kenya, and it sort of became this huge success story. What people don't realize is that Vodafone was knocking door to door and literally standing there with families, showing them how to use this on their mobile phone. There was a huge marketing campaign. It didn't take off as well in Uganda and Tanzania, and at the time, the kind of very slightly archaic perspective that we had at the time was, well, Tanzania's had a much more socialist history and isn't actually that prone to entrepreneurship, whereas Kenyans are. That was the best we could come up with. But the fact that there was this campaign to go to each house, there was money put into that, and the regulatory environment in Kenya allowed for global banks to take M-Pesa as the client and not the underlying phone holder, is really what allowed that to expand. In a way, Nigeria and South Africa, it was much slower because their regulators said, as Citibank, for example, you have to take on the underlying mobile network, the person holding the mobile phone, which is completely unfeasible. So from an infrastructure perspective, I guess what I think about things that we could build to help this perpetuate more, the regulatory side of it is key. And the infrastructure around adoption, how do we move beyond serving millennials that know what a mobile phone is by an education program? So I think there are other supporting mechanisms that take place when financial technology really succeeds.
Maybe I can ask Jonathan to add to this if you want to, because ultimately you are sort of infrastructure play because what you're providing is broader than a specific solution. What's your take on what Liv just said?
Yeah, I think it's very interesting, and you know, I focus, be very clear, I focus specifically on the UK market, so a bit more maybe established than Uganda and Kenya. I think, you know, you kind of have to deal with your end customers with the right channel, at the right time, in the right way, right? I think if COVID taught us anything is, and if I speak to my father who's 75, who now expects his banking to be like an Amazon Prime experience, I want it here and now, but then when he gets frustrated with something, he still wants to speak to somebody. You know, blending FinTech, technology, with people and interaction, and obviously we see, and I'm sure you're going to talk about ChatGPT and the use of AI to kind of deal with these kind of things. So really, I think banks need to think about, and lenders need to think about how they blend technology, how they optimize what they know to make personalized decisions moving forward. And you know, I was speaking to one lender the other day, and we talk about underserved and populations. Junior doctors, you wouldn't expect to be an underserved population, but they are. And the reason being, although they are very educated, they come from typical backgrounds, they earn or have earning potential that any lender would want as a consumer customer, because they have annualized contracts, there's a cross in their decision process. But that makes sense. It doesn't make any sense whatsoever. So, you know, how do you get around those nuances in people's behavior, you know, whether they're an immigrant, an immigrant coming into the market, but with a professional qualification, and we talked about that yesterday, or somebody who's on a gig economy type contract, right? But you want to be able to serve, and FinTech need to be able to serve everyone, not just multimillionaires who get finance anywhere.
I can see that we've got lots of different little nuggets that we can spend hours discussing. individually. But I think I think one of the things I would like us to work out, and I think it started happening, is that none of the things we want to talk about is actually rocket science. The things are there. It's more about actually putting a stronger focus on the things that we need to build. It's understanding your market, it's understanding your clients, it's understanding the approach on how you get there and how you use the data. We had an interesting conversation yesterday about the business you're building, because you're a B2B2C business that focuses on fintech, but for a different economy. So can you talk a little bit more how this ties into what you're building?
Yeah, certainly. So we're building a pay-per-mile finance platform for electric vehicles. So it's focused on, delivering zero-emission vehicles to fleets. Those fleets can then go on to rent those vehicles out to taxi drivers or Uber drivers, or use them for deliveries and things like that. And some of those businesses, some of them are, I guess, more conventional, but then some of them have, a real kind of social aspect. So they use the data that we provide by tracking how many miles that they're doing each day to actually verify, this person's working, all that kind of stuff, and they provide, they can provide rentals to people who otherwise wouldn't get them. They use a lot of other data as well. It's not just ours. But the other side of it as well is when you're trying to get financing for a substantial green investment, the way genuinely that most banks and institutions do it is that they guess on a spreadsheet how many miles the vehicles are going to do, and just multiply the number by the carbon emissions, and then that is the carbon saved at the end of the year in their report. That makes it quite difficult sometimes for really high mileage fleets to demonstrate that they're delivering like a really big sustainability advantage. Whereas we actually put trackers in the cars, and then you can see in real time exactly what's happening. So what I think is interesting is a lot of finance is based on estimates, rightly, because you have to estimate the future, but we don't actually take into account, we don't use, I get two statistics for the statistic nerds in the room, but we don't use like prior knowns and things like that. We just go, right, I know nothing about this, it's totally random, here we go, instead of using the previous history, which can indicate a lot better what someone's going to do.
I'll let you talk first, and then I'm going to bring this back together.
Okay.
So what's your take on all of this?
So I like what Daniel said about using historic kind of insights and data, and that's something financial service companies, especially the fintechs, are doing really well when they're creating their kind of customer-centric, personalized products to attract the current consumers. But I think if we look around to kind of like the large volume of fintechs that are out there today, there's nothing that they're doing that is transformative. Right, so the first wave of, if you think about innovation, especially digital innovation, it was all about adopting digital channels. Have open banking, decentralized finance, embedded finance. If you think of, to remain competitive and to grow and scale and remain resilient, you need to be relevant. So not only relevant for your current market, you need to be relevant for the future markets. So you need to be thinking about youth culture. What is the generation of tomorrow going to be doing? And what are the emerging technologies? And using all of those. So right now it's Web3 that's not just knocking on the door. It's already exposing all these new digital payment channels that can be used. But what can really hinder firms is remaining relevant and then also compliant, because the two go hand in hand, and you need to have a sweet balance between the both of them. So to remain compliant when it comes to emerging technologies, can firms rely on what regulators are putting out there? Well, I don't think so, because right now you have an economic crime plan. You have discussions from regulators around how are we going to keep AI and machine learning safe and ethical? How are we going to make sure it's not risky, these technologies? They haven't even started thinking about Web3. So you really need to have experts within tech companies that are actually future looking, foreseeing what those emerging risks are, being bold and brave enough to actually then create products that are secure, that have not only digital trust, but also the right financial crime controls in order to then launch and scale those products. And I think Web3 is going to be the introduction of a more disruptive form of financial services that we'll see. And it would be regulators then looking to the private sector on how they did it so well. So that's where fintechs need to be.
I don't know if you're aware of this, but I think we managed to throw in pretty much all the buzzwords of the last 5 years into one conversation. But in a good way. because the point of all of this is connected, and you can use the buzzwords in the right context. And I think it's actually interesting when we talk about this in the context of what are the current outside threats, and what do we do to actually work against those threats? These things all matter. I mean, we can't ignore generative AI, we can't ignore Web3. We had a session earlier where we were talking about last year, everything was about Meta, now it's all about ChatGPT. Reality is these things come and go in terms of the discourse, but they stay in terms of the technology, the business model it generates, and we need to work with that. You're talking all of you have talked about the importance of understanding your clients. All of you have talked about the importance of using data in one way or another. All of you have talked about the importance of collaboration in one way or another. And all of you have talked about the importance of the balance between building something that's maybe a little bit out there where the regulation hasn't caught up or the technology hasn't fully caught up, but at some point we need to find that balance. We have an hour and 15 minutes.
A minute and 15 seconds. We have a minute and 15 seconds rather than an hour and 15 minutes.
That's what I meant. But thank you.
No, I'm sorry to
It's been a long morning.
I can tell.
And I had a cookie for energy. Who knew? So we've got an hour. So we've got 55 seconds. One thing, food for thought for our audience related to the subject we discussed. And maybe we start with you, Dan.
Yeah, sure. I think if you're building a fintech business, don't just think of sustainability as a way of raising some more funding at a better valuation, which is probably the current view. Actually build it in. Your customers will thank you in the long run.
From my point of view, if you're a lender, a fintech lender, look after your customers in difficult times. Right, we're all facing a cost of living crisis. We have less money, we have less flexibility. Look after those customers because they'll be more profitable for you in the future.
Liv?
I think the providers of financial services to certain elements of the market are going to shift away from those that have been the primary financial service providers. And we need to be ready to serve that different customer base and provide the infrastructure that allows for that to happen.
Thank you. Alia?
Yeah, from my perspective, it's whilst you're serving your current customers really good, if you're a financial service or a regulated entity, think about those that can be excluded. We've seen an increase in firms trying to de-risk their processes and controls because they're just so wary of the financial crime threats that they face, especially when you think about sanctions and regulatory fines and censures. So don't de-risk, because if you de-risk, you're not taking a risk-based approach, which is what the basics of all compliance and regulation stand for. You need to take a risk-based approach so that you can provide to those who do not have access to financial services. And they are the less affluent. And you might think that today they won't be much of a customer to you or provide you much money or profits, but if you support them today, tomorrow they will be. So use your technology for the good because you're in a position where you can.
Wonderful. This was Scratching the Surface, food for thought. Thank you very much to my panel. Thank you very much to Dan, Jonathan, Liv, and Alia. Big round of applause for everybody.